Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Wednesday, March 12th, 2025. This is Nelson John. Let's get started. Trust takes years to build, but seconds to break. IndusInd Bank's investors are feeling this harsh reality as the stock tanked over 25% on Tuesday. The lender revealed discrepancies in its derivatives portfolio spanning 5 to 7 years, wiping out 19,000 crore rupees in market value in a single day. Analysts at Jefferies India call it a negative surprise, raising concerns over weak internal controls. While the bank insists that it had informed RBI earlier, an external auditor is now reviewing the issue, with findings expected by March end. This isn't the first time IndusInd has faced scrutiny. In FY25, allegations of improper microfinance loan dispersals forced an external audit. More recently, the RBI granted CEO Sumant Kathpalia just a one-year extension, shorter than the usual 3, possibly influenced by this latest revelation. With its microfinance portfolio under stress and a 50% stock decline in 6 months, IndusInd Bank faces an uphill battle to regain investor confidence. However, its promoter is standing firm. Ashok Hinduja, chairman of IndusInd International Holdings Limited, has thrown his full support behind MD and CEO Sumant Kathpalia, even as the bank's stock tumbled to a 52-week low. Hinduja told Mint, "This is not a big thing. Investors should not panic. The balance sheet is strong and the bank will still report a profit in Q4 FY25, downplaying the 1,530 crore rupee derivative discrepancy. While its valuation might look attractive now, analysts say only a strong rebound in asset quality and deposit growth can restore faith in the bank. Until then, skepticism lingers. In a move that could reshape India's internet landscape, Bharti Airtel has teamed up with Elon Musk's Starlink to bring satellite broadband to the country, pitting itself directly against Mukesh Ambani's Reliance Jio. For years, Ambani has dominated telecom, but Airtel's latest move could change the game. Already partnered with UK-based OneWeb for enterprise services, Airtel will now market Starlink's consumer internet. The only catch here will be Starlink will still need government approvals, including a key spectrum allocation expected by June. The partnership allows us to bring world-class connectivity to even the remote corners of India, said Airtel MD Gopal Vittal. SpaceX COO Gwynne Shotwell echoed his optimism, calling the deal a perfect match. Jio, meanwhile, isn't sitting idle. It has aggressively lobbied regulators, demanding level playing field. With its SpaceFiber services in works, Jio won't let Airtel and Musk steal the spotlight easily. But beyond the boardroom battles, here is a bigger question. Will Indians pay a premium for satellite internet? Experts remain skeptical. This is about branding and perception, not mass adoption, said a telecom analyst. One thing is certain, the battle for India's digital skies has just begun. The Indian government is considering selling 2 to 3% of its stake in Life Insurance Corporation, LIC, in FY26. But the move will depend on market conditions. The sale, part of efforts to meet SEBI's 10% public shareholding rule by 2027, may happen in multiple tranches rather than a single offering, sources told Mint. The government wants to maximize LIC's stock value. Given its size and market impact, any stake sale will be significant, said a person familiar with the matter. Rather than a one-time sale, it could be split into phases to ensure optimal value. Currently, the centre holds a 96.5% stake in LIC, after raising 21,000 crore rupees in its 2022 IPO. At today's prices, a 2 to 3% stake sale could fetch 9,500 to 14,500 crore rupees. LIC shares have struggled in recent months amid weak markets. Experts believe that the government is in no rush and may seek another extension if conditions remain unfavorable. They'll wait for the right moment when the market recovers, said Madan Sabnavis, chief economist at Bank of Baroda. For now, LIC's fate is in the market, which remains tied to global stability and corporate earnings recovery. Singapore's Temasek has sealed a deal to acquire a 10% stake in Haldiram Snacks Food Private Limited for 8,500 crore rupees, valuing India's leading snack brand at a whopping 85,000 crore rupees, $10 billion. This marks one of the biggest private equity deals in India's food sector. The agreement with Temasek has been signed, said a person familiar with the matter. The family may sell another 5% stake to either Blackstone or Alphawave Global on similar terms. The deal follows a major restructuring at Haldiram's, where its Delhi and Nagpur faction merged under a new entity. Founded in 1937 as a small sweet shop, Haldiram has since grown into a dominant player, controlling over 40% of India's snack market. With over 400 products sold across 100 countries, the company posted 14,000 crore rupees in revenue in FY24, growing at a steady 16 to 17% CAGR. A stock market listing could be on the horizon within 24 to 36 months, paving the way for investors to cash in. For now, Haldiram seems to be serving up more than just snacks. It's dishing out billion-dollar deals. Indian pharma giant Zydus Life Sciences is making a bold entry into the global medical devices market, entering exclusive talks to acquire an 85.6% stake in French firm Amplitude Surgical for 256.8 million euros. The deal, which could expand to a full 300 million euro buyout, will see Amplitude delisted from Euronext Paris. With this, we will be making a foray into the global medtech space, said Sharvil Patel, MD of Zydus. Amplitude, a leader in surgical technologies for hip and knee orthopedics, generated over 106 million euros in revenue last fiscal year. Zydus' offer price represents an 81% premium to its last traded share price. Beyond this deal, Zydus is betting big on medical devices, targeting orthopedics, interventional cardiology, and nephrology. The company is already ramping up manufacturing for stents and dialysis equipments in India. With India still importing 80 to 85% of its medical devices, Patel sees another opportunity. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a great day.